guys. A very good morning to all of you. Thanks for inviting me first of all for the this very great options Quants League actually, right? So I'm excited to share good insight about the market specifically. So okay, so let me just share my screen and we'll start with the presentation. Okay, so what we're going to talk about is specifically there are a lot of people interested in specifically do the intraday option scalping, right? So I've been to different cities and talking to people about the options who are interested in options, and even the very new generation, right? They just don't want to go for the positional trading, right? So there are great chunk of people who always interested in option scalping. They don't want to carry the positions, right? So we'll be talking about something very interesting and quite new, that how can we do the intraday option scalping using the derivative data specifically, right? So let's move to that. So as you already know, my name is Rahul Prajapati. I got the bachelor's in commerce from Shaheed Bhagat Singh College, and since 2012 I'm in the stock market, right? And since 2016 I'm actually teaching the stock market to people. I'm practicing the elite wave since long, actually. Now it's almost like 10 years, right? And then I become the hardcore option trader specifically. So so let's start with this. But before I start, you can see that there's a quote written. So I read this book, quote I read read in that book specifically. So it says that whatever happens once time, that will not happen again, but whatever happens second, that is surely going to happen third time, right? So I believe that this whole market also works on that premise, right? So this particular quote suits the market most of the time, right? Okay, so with that note, let's start the today's session. So specifically, if we talk about the content today, what we're going to talk about specifically, we'll be moving towards to find the high probable intraday trades specifically, and we'll be using the FNO data. That's the first thing. Then we'll talk about the very micro trends. How do do? So when we're talking about the option scalping, we are specifically talking about the micro trends, right? So we'll be just quoting that how do we go and use the 3-minute chart, 1-minute chart specifically, and that trading to be happening with the data analytics, right? And once we are entering into a trade, perspective, okay. But that not I'll not leave that card of option selling untapped, right? I'll definitely try to touch that also, because it's always two ways market, right? So I need to cater both, right? Okay, so we'll talk about both the things, but the people who love option buying, this session might be very useful for them. Okay, fine. Okay, so if you talk about specifically, in options market, right? If I talk, how many people use open interest as a trading tool, or anywhere in your trading perspective. So if I get the data, probably I know a lot of people. So even if I get that poll from you guys, probably I can say that 80 to 90% people definitely use this open interest as a tool, right? Okay, so no need to do specific poll for that, because I know that there are a lot of people use, and we don't have a specific data from the derivative market. We only have open interest, and then we all try to use it in a different way, right? Okay, fine. So if I say most of the people definitely going to use, so it's almost 80 to 90%, right? Now how this things comes to the place, before I talk about the open interest, I'll talk about one specific thing that we follow, the something called herd trading, right? So what is that? So I'm giving you perspective, then definitely move on to the concept, right? So because this is a very new concept that you need to learn. So for that, let me build a concept, and then we'll share the live trading also. If I get some trades out of the market, right, definitely going to share that. Okay, so we'll see how to go and pick up the trades on right time and just enter and do the option scalping, right? Okay, so if you talk about the herd trading, earlier, if you go back time like 15-20 years back, so people only talk about bazaar mein kuch khabar hai kya kisi ke paas, right? So we always talk about how the big people are trading in the market specifically, or people generally think that other people know better than us, right? So they don't believe on themselves, they just focus on other people, that oh, he is doing that, he might be doing it, right? Okay, so this is how the concept of herd trading generates. Okay, so people generally focus on what big fish are doing in the market, and what other people are doing it, and they just go and replicate that most of the time, right? And that's probably the case of most of people getting success and most of people, not able to survive in the market, right? So specifically out of this herd trading, this concept, this generate a concept for, a very good open interest, right? So generally, people used to go and see news, specifically news based trading earlier, so that we call the herd trading, right? But now, since few years, like if I started my career, 10 years back, so there was no people who were teaching the stock market specifically. Now from last 5 years, we see that there are a lot of people coming to the market, and they are, they're sharing their knowledge. That's very good, right? People are actually learning the trading specifically. And the question arises, how they do this kind of hard trading today. So if you're talking about the open interest, people generally know that, if there is the highest call option in options market, let's say 17,500 is the highest call option, and 17,000 is the highest put. So people just go and replicate that. So they learn data trading, and then, they just go and replicate it. So this is how the concept of hard trading generates, right? Now, moving on to the next concept, if you identify this place, anyone, so probably if someone is from Delhi, then they're going to definitely identify this place. So if you go back, like, 5 years, 6 years back to Delhi Rajiv Chowk metro station, what we see that there are a lot of people, can you see this extra overly crowded, right? So if you stand in between, you don't have to do anything, just people will push you in the metro, and then they will just take you out also, right? So that's that's a concept that, it's there, right? And why I'm showing this picture, because you can see that the market also works in that way also, right? So some similarity, so there is some similarity between market and uh, the this picture, right? Okay. So there are a lot of places, in options market specifically, which is overcrowded, and then once they so let's say, even if you see this, let's say there is an emergency call and this happened in this particular area in this picture, right? So what will happen? Probably people will run out of the exit door, okay, and there will be a lot of stampede, there will be a lot of bloodshed will happen, definitely, right? Okay. So that's also happened in the market also. So I like to share, copy this concept and share you with the how this open interest market work actually. Now if you move and if you see this particular chart, so this is the open interest chart, okay. And if you see this 36,000 call option here, okay, so yesterday market was trading below this, okay, somewhere here before opening, right? So if you see that green bar, this 36,000, that was like, the open interest was till this point, if you see, right? Till this point, we have the open interest. Now what happened? As soon as market open shows a gap of opening and market moved up, this was the overcrowded area, right? Okay. This was the open interest that people have created, the institutional might have created, and people were also replicating that. Now what happened? As soon from that, so that's emergency situation, and they started exiting this whole market, right? And the futures market moved to this point. Now what would have happened to this 3600 call option? That price option, the price of this call option might have definitely moved up, because if the underlying moving up, the price is also going to move up specifically, right? On contrary, if you see that open interest is decreasing, so specifically the lot of people are exiting from that particular strike price, okay. So that is where when all the consensus of the market was there at 36,000, that the market should not be crossing 36,000 anyhow. But what happened? Actually market moved up, and the option sellers, if we talk about from the option seller, they feel that they are wrong in this case, so they started exiting the position. And a lot of people, almost see, you can more than 60% of the open interest wiped out yesterday only, okay, just because of that, okay. So so there was this is where the option seller got trapped in this case specifically, and then market moved up, okay. So they might have shifted the position to different strike prices, but at that point of time they might have booked the losses, okay. And this is where the opportunity arises, because when option sellers are losing anyhow, so this is the where you point that you go and buy this particular opportunity and trade this, right? So this is what we're going to talk about. So this is what we basically called an options breakout, right? So we're talking about the options breakout specifically here, okay. Now, so till this point, I hope we understood that what we're talking about. We're talking about that, there are a lot of people who are selling the options like at different strike prices, okay. Probably the consensus say that market should be remaining in this particular range, okay. Now that range got breakout. So how does this whole thing happen? So what happens? Option seller might shift their position, and they probably book the loss in this case. When they are booking the loss, it's your opportunity. You go and buy that and make money out of it, right? So this is how we are going to find the opportunity. So this is the trade setup, okay. Now moving toward next point, how do we confirm a breakout? So even we are not talking about the options breakout as of now. If you're talking about the normal breakout, How do we confirm it? Generally, people say that, okay, this is a price breakout. Okay, so it's going up. Then we use, some people use, and then that's the story is over. Nobody knows what is likely to happen after that. So is there any other confirmation tool, or people are still happy with these two, these three data points specifically, right? Okay, so this is where the research comes, and there is we go and find some new thing about it, and we just need something to confirm it, right? So actually this is a dead end for the lot of option traders, right? Okay, so how do we go and proceed it? We'll talk about this. Okay, now, okay, so going beyond this price volume specifically, if you see this particular order book, probably you might have seen with your broker, right? Specifically, so I've just taken a screenshot from the NSE, right? So if you see this is the order book. So we have two things specifically. One is a bid and one is ask price. Okay. Before I ask one, before I move forward, just let me ask one question from you guys. That whenever we want to trade any particular instrument, right, we generally go and place the market limit order, right? Okay. If that thing come to that price, my order will get filled, and then I'll trail it very easily. Okay. Now, why generally people go and place the market order? Is there any specific reason why people placing the market orders in the market? First thing, that would be they want to fill this order specifically, right? Okay, on the market price. Okay, yes, to fill the order immediately, that is perfectly fine. There could be one specific more reason that they might got trapped. The option sellers might got trapped. Someone who have sold this particular option, or this even the futures, right? So he wanted to exit, he will definitely go and take the first price, and he wanted to exit that market price. Okay, fine. So he will be exiting at the market price most of the time. Okay, so whenever we put a stop loss or we want to exit, we just don't wait to and place the limit order, and we just go and place the market order specifically. That is the first thing. Now, if you see this price moving up, like it's like 493, 494, 495, the people who wanted to buy this option specifically, they will rush to this market, and they will definitely go and try to catch this. Okay, so that's happened, that's, we call it a FOMO, right? Fear of missing out this trade. So they just go and buy this call option, okay, or whatever whatever instrument they are trading. So even if you read this, we have like best 5, you can see the bids and ask there. So generally, if someone is trading on the ask price, he's buying on the ask price, or bid price, he's selling on the bid price, he might have a strong conviction about that, right? Okay, on this particular premise, we are going to move forward in this case. Okay, so keep this thing in mind, that we are talking specifically about the order book analysis. Okay, so the extra data that we are going to add in our trade book specifically is that in a trading system is that order book analysis, right? So just to keep that in mind, whenever the market happens, market moves up, generally people go and place the market order specifically, okay, at the probably ask price. So whenever some trades happen on the ask price or bid price, people or traders do have a strong conviction on that. Okay, that is the one thing that we are talking about. Okay, but do we ever try to analyze this market, this order book ever? Probably, if you see, if I just go with a small conviction that I've seen that people are using, so the buyer quantity is high, seller quantity is less, the stock has to move up. But actually, you never going to get anything. These are all pending orders, right? You're not going to get anything out of this particular the screen, right? So what you're going to get it is, so this is where again a second dead end for us, right? So we cannot get anything out of it. So this is where we're going to talk about. We'll be talking about how this order book data is specifically helpful for us to trade in the market. Okay, that's what we are now. So we are actually using this data of executed trades, right? Trade initiated specifically, and the order flow, how the order is flowing in the order book, and how the trade initiations have been happening. So we are going to talk specifically about that. Okay, so that I'll show you some examples of. Now, coming back to the options breakout, if you see that how do we confirm this? So what happens generally, if you have see that picture, right? It started with a very small hole, and then it become bigs, and then it's all collapsed, right? So generally this happens with the same thing in the options market also, when we have any highest call option and highest put. Okay, so if that market breaks that level, this kind of situation happens, and then market moves up, right? So this is where we going to find these kind of opportunities and trade it. So generally what happens, a small movement triggers the big movement, and then it creates a chain reaction, and then price keep on moving up and up, right? So probably if you see that probably you guys might be seeing that when you trade Bank Nifty 10-15 rupees call option, just going to catch that specific move. Is there any data that confirms it? Yes, there is. So we'll just trying to go and use that. I hope the concept is clear till this point. Okay. Now, if you see this data, how do we use it? Generally, we have something called, highest call option. We call it a resistance, right? When we have highest put, that red bar specifically on the put side, we say it is important support, right? Okay. Now, generally, what happens when we go and take a trade? What happens when we, market is let's say trading at this point, and when it breaks up, we say that it's a breakout in the options, right? Okay. But how do we confirm this specifically? How do we get to know that this trade is likely to be sustaining in the market specifically? Okay. Generally, we talked about the open interest data, okay, and volume and then price, okay. But still, there is something is missing in this particular trading system. So that's we are going to cater today. Okay. Okay. So let me just give a second. Okay. Now, how do just get to know this trade is likely to be surviving? So we're talking about the gamma explosion. Probably people know. So what is this? This chart says that if you see this chart, the orange line, if you see that, what is that? So that is a gamma curve. Okay. So generally what happens, this is like, bell curve shape curve, right? Again, if I say, so it's, so most of the time, gamma explosion happens, generally at ATM. Okay. So ATM call options, they have the, highest effect of gamma specifically. And even if you see this, the green line, it is a delta. Okay. So when the option is out of the money, it's very low delta. And then as soon as it started moving up to ATM, this shows that there's a, highest movement rate of change happening in the ATM call option, right? So that's why the gamma is always at the, high at the ATM option, right? Okay. That is the first thing that you need to remember. Second, if we talk about this, how we can, generate the good returns on this thing, right? Specifically. So this is the gamma curve. So, if you see that red line specifically, that red line is very old, right? Okay. So probably, even there, let's say if this has a 25 days to expiry, so that's remain very flat. Okay. Even to 10 days to expiry, this gamma trade, gamma is still flat. Okay. And even if you talk about this 7 days, again, not very, very good, again, if you see that is very flat. And then if you see the gamma value on the ATM, it's very good on the, even at the ATM, right? It's moved up quite a good, right? So how do we find and how do we, understand the effect of gamma on the option trade? Let me take you to the Excel and, help you with that, how the gamma actually plays in the market. It's very simple. I'll show you one calculation and you will understand it. Let's say it's Nifty, right? Okay. So Nifty is currently trading at 17,500. Okay. Now the strike I'll take. So let's say it is again 17,500. Okay. So I'll take risk-free rate at 0. Okay. Now then let's say volatility is 20%. Okay. So just take an example. Okay. Now days to expiry, let's say we'll take 20 days as of divided by 365. Okay. Now based on these value, what should be the rate of this call option? We'll do it. Okay. So let me just calculate it. We'll do it. If you do this, and just do it. So the call price should be 326. The call should be quoting at 326. Okay. Now, what happens if there's a change in the underlying price? Let's say the underlying price moves to 17,700. Let's say. Okay. So what would be my price? If I just do this, so the price would be 438. If the price moves by 200 rupees, on the same day, what will be the price? It will be like 438. So if I check the return specifically, we are just making like 34% return in that. Okay. When we have 15 days to expiry, we have taken 20, I think. Yeah, 20 days to expiry, right? So the gamma effect is not there. If you have seen that, the curve was very flat, right? Now let me change this value and take another scenario here. Let me just copy this to here and let me just change this value to 3 days only. Okay. 3 days to expiry, and this changed to 3 days to expiry now. Okay, so now see this. Logically, the 120, if this was the situation, what happens? So 126 option will become 250, and the return that we are generating is almost 98%. So just by understanding this mathematics, so that option breakout trade we are going to do, this is based on the gamma specifically, right? So we need to find a gamma trade. So that means we have to trade this kind of options in the last week of expiry. Okay, specifically intraday. That I'm not saying that you cannot go and trade this in the, you know, first week and the second week of expiry, but gamma effect is not there so much, right? So here you need to focus and, you know, just need to see this. See, this is the, you know, effect of mathematics that can play in your, you know, trading specifically, right? So 34% return, and here we are just making almost 98% return, right? So it's way good, right? Okay. So this is what we need to focus, and that's why we am talking about we need to learn the gamma trade here. Okay. So I hope this is this till this point we all are okay. Okay, fine. Now, concept of breakout and trap. So let me just give you another example, and then we'll try to, you know, make you help with this. Okay. So these are the highest call and highest put option and of different strike prices. Okay. Now what happens actually? Let's say the price is trading at this price near this call option. Okay. What will happen in the next session? Let's say its price started moving up. So what will happen? See, the price is trading at this near this level. What will happen? The open interest in this particular call option will start going down, as I've shown you in that graph in 36,000 bank nifty. What actually happened? You know, as soon as the price started moving up, the unwinding started happening in the call option. Okay. Now, what is actually happening? The price moved up or not? We don't know after that, right? But as of now, the open interest started going down. If the price started moving up after that, let's say, so what will happen? The price actually going up, and for this call option, and Y started decreasing. That is what we call it a short covering. Now, why this short covering comes in the picture, and you know, and this point of time, all the option sellers might got trapped in this, because when we are talking about the options gamma trade actually, you know, why gamma becomes so, you know, explosive in the last week of expiry, because option sellers does not have a chance to, you know, shift the position, so they need to exit the market, right? So even if this, you know, they shift the position to the other strike price, they might not be able to cover the losses that they're going to have. So that's why they don't generally shift in the last week of expiry. They generally book the loss. Okay, so that is how, you know, market moves, and you know, the concept of breakout and trap comes. So this is where the option sellers goes in. They got trapped specifically. Fine. Now, understanding the short covering concept from the order book. So how does this happen actually, right? Let's say the current price of this 17,200 call option is 275. Now I'm an option seller, and I got trapped in that particular 17,200 call option. I want to take the exit. So if I go in the market and, you know, I take the exits, let's say I want to exit with the two lot. So I'll go and just buy at the ask price, that is 277. Okay. Now the current price is 275. I'll go and just put the market order, and what will happen? The price will jump from 275 to 277. What happened? I'm exiting my position. That means I'm closing, I'm reducing the OI, and price is jumping to 277. That is concept of short covering, right? Short covering happening in the 17,200 call option. Fine. Now there's another person will see, and he will do the same thing. Now the next price is 278. So he will go and buy that. So he will exit at 275. Okay. What will happen? The price will jump from 277 to 278. Right. And then the next person will come again, he will do the exit. So the price will move to 278.90, 279. Okay. And then might be 280. So this just probably I've shown, like, you know, 100, 200 quantities. Oh, sorry, probably 1,000 quantities, not more than that. Right. But, you know, even in 1 second, we can see that, you know, lot of, you know, specific, you know, huge quantities being traded in just 1 minute. So even that happens, the price generally move to the, you know, probably like, you know, 300 or 310, 20 very easily, right? So that's what we call it, right? Okay. So this is what we're talking about, the short covering. Okay. Probably I know there might be a lot of questions, right? Just keep your questions with yourself, even if you have. So I'll just, you know, cater all the questions, right? Okay. Just try to listen and try to comprehend with the, you know, concept that we're talking about as of now. Okay. So we're talking about just to, you know, go and see the short covering concept. Okay. How the short covering happens. So whenever someone goes and exit the position, what happens? You are just trying to exit at the ask price. So they are triggering the trades and the ask price. And there will be one particular set of people who are also trying to catch this trend. They are going and buy this option also, right? So the trade happens in that way, and then price keep on moving and open interest goes down. Fine. That is what we're talking about. Now, so we understood this concept. Let me just, you know, revise it, and we'll go from this live trading session. We'll see how we can find this trade. Okay. So first of all, what we have done, we're just trying to find the options breakout. So we need to find where we have the highest call and highest put options. Okay. That is what we need to do. Second, we need to find, is there an opportunity that, you know, we are going to have that all the option sellers are probably moving out of that call option? Yes, we can do it. That is the second thing. Third thing is that we need to find some trade based on the order book. So is there any data that which gives me a quantity probably on 1 second or 1 minute, which says that these are the quantity that has been bought on the market price? We don't have, generally we don't, anyone in this whole market does not have this data, right? Probably institution might have. So they always have an upper edge on with us, so they are going to win this market anyhow, right? Okay. So if we want to have this, we just want to match our tradings with them, so we just need to have this data. Okay. So I have this data. I'll show you how you can just use this in your trading specifically, right? Okay. So we'll try to find some trades. So so in Quants we have a one tool that is we call it triggers, right? So we're going to use it and we'll try to find it. So how do we do it? See, this is the screenshot. I'll show you in the live also. If you see the Infosys right now, probably this is a screenshot of yesterday. So Infosys was trading at 1906. So it might be trading below that. Okay. Now the highest call option the Infosys was 1900, where we have the highest open interest. Okay. Now, when the stock was trading below this was fine. And soon as the stock started moving above 1900, the open interest started decreasing. Right? The open interest start decreasing in this particular specific, you can say, the strike price. Okay. And the stock is trading near to, so we are anticipating that this could be a breakout happening. That is the first thing. Second, if you see same happening with this, so this stock has actually moved up. Even if you see the BPCL is just like below the highest, just below the highest strike price, and the open just started decreasing. That's just a small hole happened in that dam, and as soon as the stock will move, this is likely to be bloodshed happening in this, right? And what will happen? The price will move up. So because of this short covering, we are going and buy this market. Fine. Even if you can see the Tech Mahindra also, shows the same kind of situation, right? It's just near the highest call option. Okay, you can see the percentage also. And if you see here, what is happening? This is 1500 call option. Okay, and you see open interest also already declined by almost 11%. So this is kind of a breakout we are looking for on the higher side. This might help you to identify, where what are the all stocks which are actually trading near to the highest call option. You can just sort it out. I'll show you how to do it. And then once you find this trade, you just need to wait for that confirmation of the breakout. Now the question arises, when we are going to have that breakout? Because across the whole day, anytime that breakout can come, right? How do we get to know when it is likely to come? Okay, so that is where we need to use the order book analysis, order book data, right? I'll show you that. So what is an order book analysis? Order book analysis is kind of a data that we have created, okay, specifically, and you are going to have a different kind of 33 analytical tools in that, okay, where you can just all the analytic based on the order book, specifically how the orders actually flowing in the order book, right? If they are cancelled, they are new order quantity, how much the quantity has been bought. So that is what we're going to talk about specifically. Okay, fine. Isn't the option price derived from the underlying? Presume that yes, logically, but nothing happens in this. In India, actually, if you see, generally, India is the biggest. We have the hub for the derivative trading now. So what happens actually? That volume generally comes from not from the futures market, not from the equity market. The volume is coming from the options market specifically, right? And it's not always that underlying moves, then stock the option price will move. When there's activity happening only in the options price, the arbitrage will come and they will jump the price of the stock price also. So it's all other way around, right? It's not always happening from the one side, that it's always stock will move and then the breakout will come in the options, right? So that's probably a kind of a change of thinking that we need to have. It's not always that underlying drive the the options, right? So you just need to try to think that if most of the people are only trading the options, very few people are trading only the equity market and the futures market. So how they are going to drive it, right? Okay. Just try to comprehend this and you will understand it very easily. Oh, not an issue, right? So the breakout is coming on these strike prices. Okay. As soon as the underlying price will move, we are going to buy this. Okay. Options, right? So just we need one particular data for the confirmation of the trades, right? Okay. That is what we are talking about. Okay. Now, if you see this particular chart, so this is previous chart, okay, few days back, okay. So Reliance was trading near 2600 call option, probably on 25th, right? 25th, okay. If you see this, if you see what is this first, okay. What is this buyer initiated quantity? It is the quantity that has been bought on that particular minute. So it's 1 minute chart, okay, at ask price. Okay. Now, Reliance 2600 call option, why someone will go and buy this huge quantity of 1,67,000 on a market price? Why someone was not buying at this area? Why this quantity was very less? Even if you see in the previous bar, when breakouts was just likely to happen, the quantity was very less. It's very less. It's like 13,000 only. So this is the executed quantity that happened in the market. Someone has bought it. It's not the volume, it's not the why, it is just the pure quantity. Someone has bought it at the market price. So the quantity that has been executed on the ask price on that particular minute, it is that quantity. Okay. Now on this particular breakout, so as I already discussed, that whenever someone is placing the order on the market price, this increase their conviction. Either it's a seller, he wanted to exit, either if a buyer who want to go and jump into enter in the market, because he has the conviction. That's why he's going and buy that particular strike price. Okay, so this gives me confirmation that someone has bought very good quantity of 1,67,000 on the market price on this particular bar, and this is a breakout, right? So even if I wait for that particular minute, this call made a high of 137.55. Okay, this is where you can see this is the high. Okay, so that first minute, 1 minute, 2 minute, 3 minute, fourth. In the fourth minute, my trade got executed because I'm going to buy above the 37.55. I'm not going to buy at this price because I'm still want to have the confirmation. Once this high will be taken off, we'll go and buy this. Okay. Now the question arises, how are you going to book your profit? And even if you see that in just like 5-10 minutes, market, the call option price moved to 37 to almost 46 rupees. Right. Now the question arises, how can I sell it at 46 rupees? Nobody can. Nobody actually can, right? So in this case, whenever we do option scalping, we need to specifically go and trail the stop losses. Okay. So probably you guys know different ways to trail a stop loss. Most of the people use VWAP. You can use it, but I generally use very simple formula of the 3 candle stop loss, right? That works most of the time. And even if they ask you to exit, you take the exit, not an issue, right? So when I took the trade at this particular bar, my stop loss would be this only. So I'll count the 3 bars. 1, 2, 3. This is the bar I'm looking for. Its low is my stop loss. This value only 33.5. Okay. Now as soon as market moved to this point, this highest candle, 1, 2, 3. This is my stop loss. Okay. So I'm actually above the my buying price. On this particular bar, let's say if I'm on this, so 1, 2, 3, my stop loss comes to this price automatically. Okay. And in the next price, it got triggered. So it got triggered somewhere on 42. Even if you buy this call option at 37.5, 37.55, okay, 37.6, let's say, the call price moved to almost 42. So you are making 7 or 8 rupees in Reliance approximately by just like 10-15 minutes. So how do I got the confirmation? I got the confirmation because this quantity is there. You need this quantity to understand this, right? We cannot just keep on using the volume and open interest to confirmation, right? So these are the very new kind of data that you need to look, and you can just, it help you to confirm that trade, okay, specifically. That's the one example. Let me show you one another. In the yesterday's chart, okay, in the Nifty specifically. Now you see, so generally if you see this in indices specifically, a lot of people keep on placing the market orders, right? Because they're good liquid, there's a good liquidity, in the options of indices specifically. But when we talk about the stocks, you generally don't find good liquidity, so people don't generally go and place the market order specifically, right? So there will be very few events when these people are coming to the market and placing the market order. Okay. So that's what we're talking about. So even in the Nifty, see, even on this bar, we have a good quantity and the price moved up. So 70 rupees call option become like, 92 in just like, 5 or 10 minutes. So that is what option scalper required, right? Okay. Now, yesterday I showed you one chart specifically of the Bank Nifty option, 3600,000 call option. When the price moved up, see, we have a breakout here. That's 1,83,123.5 quantity someone has bought as the breakout comes. This 480 call option, 460 call option turned out to be 580, 550, right? So this is what we need to go. Right? It happens. So this is how you need to see the trades in a new perspective, right? Okay. Let me see. I have some query. Okay. I'll show you. I'll show you where we can see the buyer initiated quantity. Let me just come to the real example. So let's come to the the concept, and I'll show you how to use this whole data specifically, right? Okay. Now see, we need to find these trades specifically. Okay, so what we need to do first, we need to find those stocks where we this whole thing happening. Okay, so first go to the triggers, right? Probably the live market is going on. So if we get something, so it, and even if you understand this, today's expiry, right? So probably we'll get good trades. So I wanted to keep this session post lunch, because we might find some good trades, because now we are all done with the 920 straddle, so market might be consolidating, right? Okay, so probably we'll not get some trades. Okay, so if you get the if you see this data probably after like 1:30, you might get good trades, right? Okay, so see how do we do it. These are all the futures market, futures of F&O, right? Okay, so futures stocks and their prices. Now if you just study this for a minute, right? Okay, so what we need to do is just see the current market price. Okay, so the current market price is 947 for RT Industries. Okay, the highest strike for RT Industries is specifically 1,000. It is also unwinding because last day is there. So but the difference between the price and the highest call option is 5%. So that means the stock is actually 5% far away from the breakout level. So I don't have to check it, this stock. I really don't have to check the RT Industry, right? So this is not in my radar. So how do I do it? I'll just sort it out. Okay, so you need to go and check the only green ones, the green differences. Okay, which when the stocks are very near to the highest call options. So probably if you see the Tech Mahindra, so Tech Mahindra 1500 is very near. Okay, so this is what we're talking about. It's very near to the highest call option. Infosys again, that's very near. Axis Bank 760 call option is again near. Can you see these open interests are started declining? Now I got these three stocks where we stock is exactly trading at the resistance. Okay, and today's expiry, so when the stock will start moving up, we'll have a gamma effect on these trades, and they will magnifold your trade specifically. So we can see these particular three trades specifically. Whenever we get a trade, we can just go and buy it. Okay, I'll give you the setup at least, right? So as soon as the the move will come, we can go and just take a trade, right? Specifically. So let's start with the Axis Bank first, 760 call option. Okay, so I'll just go, and even if you see this particular thing, I was just looking at this chart before. So see, Nifty 17,500 call up. Why also here? Before I just move to the other, see. Now if you see here, what happens? This is the buyer initiated quantity we have just in this data. Even if you see here what is happening, this is the open interest, right? So open interest for this call option. So the breakouts started coming. There was a few decline in the open interest, but the confirmation doesn't come. If you see this, the buyer initiated quantity doesn't increase that much, right? If you see here, like increasing like this, these kind of spikes gives you a good breakout. Okay, but here nobody was interested to buy this call option. It didn't move up. Okay, this can be, but that's not an issue. Even if for that rollover, people are exiting from that call option, or probably so that changes are specifically in the option. So people generally, how do they go and roll over the option specifically, right? The change might be because they are exiting. So even that happen, the price will definitely have to move up, right? So it's not today we are going to use it. You go and check it tomorrow also, even after the expiry, the trade might work in the same way. Okay, now once we have the breakout here, if you see, okay, the breakout likely to sustain. We don't have a buyer initiated increased. We don't have a very good spike somewhere. So it didn't. Okay, so when we are going to have this breakout, so as soon as this 17,500 call option break 80 rupees, and we have a very good spike in the 17,500 as a buyer initiated quantity, right? This is we're going to have the, so and see the open interest started increasing. So that's, we are not, the trap is not happening in this call option. So we need that, that to happen. Okay, now let's come to the Axis Bank. Okay, Axis Bank. So what we're going to do, Axis Bank 760 call options. Let's add that. So we are specifically checking the only options data. Okay, we are not checking the futures as of now, because we have already seen that futures here. We know that there's a breakout is likely to come. We just need to confirm when this breakout is likely to come actually. Okay. Now, if we see this chart specifically, so when this breakout will likely to come? When we have a this breakout, this will take like move above 5 rupees. Okay, that breakout above the 5 rupees level with a huge quantity happening in this market price at, probably see there was one quantity happened at this price. Okay, but the stock is still consolidating. As soon as we're going to have a breakout above 5 rupees and we have an increase in the buyer initiated quantity and open interest should decrease. These are the three conditions. Okay, this should increase, this should give a breakout, and this should go down. Open interest has to go down. Okay, if open interest is not going down, we are not going to get a trade, right? One more thing we can see, because we are looking for a gamma trade, so we can add gamma also. This is a real-time Greek that you can have on your chart. So see, even this since the start of the morning, yesterday the gamma value is very less, and see that increased manifold. That means gamma is going to affect your delta in a very good manner, and that you're going to see in your call option also. As soon as the breakout comes, this market likely to move with a great quantum. Okay, that's the first stock. Wait for this call option to take 5 rupees at least on the higher side, and just you will see. So probably if you find that 0 to hero calls, this will definitely help you to find those trades specifically. Okay, the first is Axis Bank. As soon as it break above 5 rupees and with huge buyer initiated quantity decreasing in the OI, that will trigger your trade specific. That is the first trade. Okay, second we're talking about Infosys. So let's see, Infosys is there. Okay, what's this? 1900. So that is 1900 call option. Okay, this is where we are going to find a trade. Okay, you can check further other stock also. Nifty is also, see, 17,600 is the call option where we're going to have a breakout, but there is a huge addition happening on this call option. So probably if we see and go in 17,500, there might be, we are going to have a, this thing. Okay, so let me see. See, if you see this option, there is not at all any, there is not at all unwinding happening in any particular call option. So that is very difficult for us, to find a breakouts in specifically in indices, right? Because people do keep on creating the, position in as a selling, right, in the strike prices. So see, everywhere is additioning happening, only addition happening, right? So 17,500 straddle is on charge right now, so it's not moving anywhere, right? So the market might be staying stable. The call has just turned out to be very numb. So we just need again a 5 rupees breakout here in this call option also. And you need to have a good quantity move up. So even if you see there, since that bottom C, only the people started picking up and then that call moved up after that. So anyhow, whenever this kind of breakout comes, you need to just see these kind of trades, right? Okay, that is what we're talking about. Fine. So first, you always go and check, the triggers, and then we can, just go and use this technical chart where it's live data. You can even have a 1 second data of actual quantity that has been traded in the market, and that will help you, right? Now, is there any way to do again, go from the perspective of, find the trade? So because we are not able to find where we are actually having a movement, okay? So there's a flow. So you need to follow that flow. Go to the intraday movers first, okay? Okay, now what is this? So this is a kind of a screen that you should always look for, right? So what is happening? This is live, so we can just go and at least look at the 5 minutes. Okay, so we need to see what is happening across all the F&O market specifically. So in the F&O, in this intraday movers, what we need to see is first go and see this is the first screen. Okay, so this screen only caters the price gainers. Wherever the price is gaining with any percentage, right, across the market. So these are the stocks which will be listed here, irrespective of what the open interest they have. You don't have to go and check it, right? Okay. Second, that is the first thing. Second, the price losers we have. So it only shows the price losers. Then we have Y gainer. Then we have Y losers. Okay. So these are the 4 screens that you need to look for. Now, Bharat Forge is the stock which has moved a bit in the last 5 minutes. Okay. Jindal Steel is also moving up. So Jindal Steel, we can go and check it. 530 call option, right? So now we can go and check the triggers, right? Because this is the stock which are actually showing a movement. Okay. We just not go and check any particular stock. So if we check Jindal Steel, so Jindal Steel is on 530. They're adding there is an addition happening in this call option. So we might not get a trade specifically. So TradingView does not have these indicators because we have created this indicator specifically. Okay, so you're not going to get this data anywhere. So you have this data in the Quants app, okay, only, right? Okay, fine. So here we don't have this, this strike price because 5:30 there are a lot of addition happening in this, right? There's a huge addition happening in this particular call option. So this is not a breakout coming up. Okay, so we have PI Industries, Tata Motors. Okay. So if we see Tata Motors, probably that's 500 call option is far away as of now. So that's the highest call option. Even if you want to check very near call option, we can go and check it, right? Okay. Okay. So if you see this 450 call option shows a huge unwinding. Okay. So then you can go and check it, right? So Tata Motors 450. So it's far away, right? But still we can get a move in that particular call option. See, already moved up, so it's giving a breakout. So probably 450. Okay, 450 call option. Now see, this might give me a breakout. Okay, just keep a tap on this window and you will definitely find the trades here. Okay, now see, it's already dead, but still we can just find a good trade. Okay, no issues. See the last, if you see this particular quantity, see what is the huge quantity. See why people are not buying with a huge quantity in this particular area, because there was no conviction. But someone has just like in the last minute, someone has bought almost like it's 1,11,150 quantity at market price at even 0.35 quantity. It's kind of a pure satta that you can have, right? So probably even if the stock moves up, this might turn to 2-3 rupees, and if you lose, you are just going to lose 0.35. That's kind of satta you can play, right? Because this gives me a confirmation that someone has actually bought this call option with a huge quantity, right? Okay, so and we are seeing that the unwinding is happening. If you see and go and check OI. Okay, so OI is continuously going down, so there is no chance that people are building the position in this. So that's clear cut unwinding happening, and it has to move up. So because of short covering, the stock price will move up. The stock price will move, the call option price will also move simultaneously, right? So just keep an eye on these kind of data, and you have a good confirmations, right? Okay, clear. So this is how you go with the flow in this case, right? Okay, see Godrej CP just came in this, so we can go and just check the Godrej CP is just giving me a trade or not. Okay, so it's not very difficult. People generally says who is going to do these kind of trade screen switching, right? It's something we need to do right from our side. Okay, and it's not always automation always, right? So there are manual trading, it's and its own charm, right? Okay, so it's not very difficult. We read algos and all those things for a difficult coding. It's very simple that you can see that Godrej CP just showing me a trade, right? Okay, so Godrej CP is there, 720 call option, and it's already moved up, right? So can we check in, go in 740 is giving me a breakout? Just we need to see that also. Okay, so it's across all the strike prices unwinding happening, so this might move up again. So that's why today is a good opportunity to find a lot of trades, right? Okay, this call option is trading at 5 rupees. Okay, so we can just go and check also. Unwinding is definitely happening, so this is another trade that you can look for. Okay, see it has already moved up. So if we see buyer initiated and seller initiated quantity, okay. So as of now, we haven't seen any picked up quantity in this, right? Okay, today. So as soon as this is the futures, right? Okay, so let me just go and check 740. Probably a bit illiquidity comes because the future seems to be liquid, right? So there are few spikes in between one lots, not much, right? Because the stock totally seems to be liquid in this arena, right? So not a good stock to trade, right? Okay, so this is how we you go and cater the problem for an option buyer. Okay, so probably I just have 10 minutes, right? So let me just give you one perspective of the option seller, how the option sellers can use this specific data. Okay, so let's just go and see this open interest for Nifty first. So this is how an option buyer will go and create a trade. So for option scalping for intraday. Okay, now how the option seller generally you can use this data on expiry day specifically, that's just I'll share in 2 minutes, right? Not a major time it will take. So if I go and check it, people create straddle and strangle, right? So if you create a strangle today, 17,600 is a good trade, or 17,400 might be a good trade, right? Okay, if you are not okay with straddle, we are just going to sell these two strike prices. Okay, this is what we're talking about. Now what we need to do is we'll go to the order trade analytics, create a watch list. Okay. Now just let me just remove this thing. Remove this thing. Okay, not required. Okay. So if we talk about Nifty today, so I'll just go and check call option of 17,600 that I'm going to sell. And from the put side, we are going to sell 17,400, right? This is what we're going to add. Now, let's apply the changes. Now, we know one thing specifically, that when these call options actually, shows a good movement, right? Okay, it's because of this buyer initiated quantity increases. Okay, when this in quantity increases manifold, we know that this call is likely to show a gamma movement, and that there will be huge movement coming up. So what generally option sellers do, even if this premium seems to be very low, let's create a straddle only. Okay, let me just add 17,500 only. Okay, just give me a second. Combined premium seems to be 80 rupees as of now. Okay. Now, probably you are option straddle seller or straddle, the strangle seller. That's not an issue. What generally we do as a risk management? We generally put a stop loss of combined premium of XYZ percentage, and people have a different way to put stop loss when market moves up. Okay. Now, what generally happens if the market started moving up, this 15,500 call option shoot up to, probably like 130, 140, 150, and this will drop to only 15 rupees. So this whole straddle will come into a loss. Okay. Now what we can do is we can at least take the exit once we have some signal. Okay. So let's say the stock started moving up, the Nifty started moving up. Buyer initiated quantity will say in 17,500 call option will increase. Okay. And seller initiated quantity. What is the seller initiated quantity? Seller initiated quantity at, basically it's the quantity that people are selling at the, the bid price. Okay, that means the option sellers might go and do that, right? So when market will turn bullish, specifically when buyer initiated 17,500 is increasing. Okay, and when this option, the put buyer seller initiated quantities is started coming down, started increasing in this particular strike price. Okay, this is what we're talking about. Fine. So that gives you confirmation that this leg might go in a loss. That's 17,500. Okay. So as soon as that happens, what you need to do, you need to take the exit from this, and you just trail this 15,000 put option when market turns out to be bullish on the expiry day. Okay. Because this is a real data that you are having on the real time. What you need to just go and check, you just need to add these two strike prices, and whenever the huge breakout comes in 17,500 with this quantity, take the exit and just trail the put option. And if on the downside it happens, like the buyer initiated started increasing in the 70,000 put option and call option, the seller initiated, that what happens, you're going to specifically go and check this these two data, and if that happens, just trail call option and exit from the put option. That is what you can do as an option seller, right? So when you have a real quantity in front of you, that shows that this might shoot up. That is what an option seller can do. Okay. So this is the the whole idea of using the order entered data, using the specific concept in the market. Okay. Okay. So this is it. Or anyone has any question from this, please do let me know. Okay. What about the physical delivery? If you're creating an intraday stock, intraday, you don't going to have a physical delivery about that option. So no need to worry about it. Right. Okay. Okay. So basically, when we're talking about the so no issues with that. Okay, that's not going to happen. So if you place the intraday trades, that's not going to happen. Okay, so no issues with that. Okay, for physical delivery. And second thing, when we're talking about the sorry. Okay, so just what we're talking about. So you can just have a small recap. Or so let me just give you what we have done. So whenever we talk about these kind of breakout trades, right? What is happening? We just need to go and check the highest call option and highest put option data. Okay, fine. So just we need to find this kind of breakout. So the breakout might be happening if I see this chart. Okay, so as of now, for me, 17,600 might be having the highest call option. Okay, so if that market moves up and break that line, market might move up. Okay, so that's the breakout level. On the downside, if market break the 17,000 put option, market might show, break a support and it will move down. So what does this, how, so and when we're talking about the last day of expiry, or probably in the last week of expiry, this is the kind of confirmation that you're going to get from the gamma trade, right? That is what we're talking about. Okay, so now how do we get the confirmation of these kind of trades? You go and check the order and trade analytics data, and where as soon as that breakout got confirmation, as we have shown you a few examples, as soon as we got the breakout, just go and buy it and trail that stop loss. Stop loss, you should be using the 3 candle stop loss. Okay, so count the current candle and then 1 2 3, third candle low should be your stop loss. As soon as the stock keep on moving, just keep on increasing your stop loss with that candle, right? So you'll get that confirmation that also. And if the market drops, you just take the exit, because this trade is not likely to survive more than 5 to 2 minutes, 5 to 10 minutes, not more than that, right? Okay, so that is what a scalper need, right? Okay, that's all. Yeah, time frame of the candle is just basically 1 minute. I use the 1 minute candle that I showed you. Okay, we don't have that much time, because when someone buy, they just fill the whole data in just one minute only. Okay, so as soon as we get the confirmation, we cannot wait for 5 minutes to the things to happen, right? Okay, so 5 minutes will be very late, so you just need to use the data, and we have the live data in this. Okay, so we just go and check this 1 minute chart. Okay, fine. Okay, yeah, any other questions? Anyone? So that's all from my side. If you have any question, we will just put. I'm just still there for 3 minutes, because my time is over, I think. So if you have any query, you can just put it there. I'll love to answer. Okay. So even if you have some queries with this particular tool and for this thing, so you can just go and ask the Quants support. They will help you definitely. You can also connect with me on the Rahul Prajapati on Twitter, right? Okay, so that's my Twitter handle. Okay, so that's all. Okay, so any query, please. Thank you so much for joining me, my session, guys. I love to do this session, right? Yeah. Yeah, buyer initiated quant, this quantity is only available in the Quants app. Okay. Yeah. Yeah. Thank you so much. Thank you. Yeah, option unwinding concept is available for all the time frame, but specifically we saw at very probably it will be very good if you go and trade the intraday. Okay. Yeah. Okay. Yeah. Thank you so much. Thank you so much.